In this week's crypto news, are Beanie Babies the new BoardApes? Who cares? NFTs could actually do the real world some good and become a payday for everyone.
Interpol has issued a red notice on the South Korean terror developer Duquan, but he's using his Twitter feed to claim he is not hiding from the authorities.
If you're a Voyager stakeholder, you'll be happy to hear they have a bid winner. What Voyager is doing to get out of their Chapter 11 bankruptcy.
Bitcoin holders are actually hoping Santa brings them a lump of coal this holiday season. New studies are looking into how much energy resources proof of work blockchains like Bitcoin are actually consuming.
We have market prices to cover, daily winners and losers to declare, and smart money moves to uncover to maximize your portfolio. All that and more on this episode of Crypto Market Today. We're your hosts. I'm Lucy Vanghouse.
And I'm Jeff Mann. Thanks for joining us. Before we dive in, don't forget to give this video a like and hit that subscribe button so you don't miss out on the latest crypto news. Let's start with a look at the markets. Bitcoin, the number one ranked cryptocurrency by total market cap, started this week at $18,960 and finished the 7 days roughly around the same place at around $19,130. Bitcoin's biggest price action of the week occurred Monday when its price shot up 6% in 12 hours. Before speculators quickly just gave it all back, with the price dropping 7% in just half the time. What caused the volatile pump and dump? Hal Press, founder of investing group North Rock Digital, offered his theory on Twitter, quote, "False hope on the foreign exchange narrative exacerbated by Bitcoin's derivative ape buying $600 million of Bitcoin." A few hours later, the press again posted on Twitter, quote, "Unwind complete. After the $600 million of open interest was either sold or liquidated, and the price began to stabilize." Zooming out a bit, Bitcoin is down 6.5% on the 30-day chart, reaching a monthly high of $22,600 and a monthly low of $18,300.
Cameron Winklevoss, the billionaire crypto investor, took to Twitter on Tuesday to comment on Bitcoin's recent resilience and decoupling from equities. Winklevoss writes, quote, "Bitcoin has been remarkably resilient these past few weeks, despite the stock market losing trillions in value. No idea if this is the bottom, but there has been a curious decoupling. Are folks starting to re-examine the disaster insurance thesis?" For comparison, in the last 30 days, the S&P 500 is down 13%, the NASDAQ is down 14%, and the Dow Jones is down 12%. Moving on to technical analysis with insights from TradingView.com. Looking over a 1-week time frame, Bitcoin is currently flashing a sell sign. The oscillating indicators are predominantly neutral, which can signal a possible trend change that is yet to start. And moving average indicators, which provide a way to gauge momentum and confirm trends, point to a strong sell position.
Lastly, we'll take a look at the Ethereum Bitcoin price chart. The Ethereum Bitcoin price is down 2.3% on the week to 0.068 Bitcoin per Ether. Professional trader Mr. Android offered his commentary on the current Ethereum Bitcoin chart. Quote, "Here the chart shows the price of Ethereum versus Bitcoin, and we can see the long-term triangle pattern signaling accumulation. Also, the price has recently retested the 200-day EMA exponential moving average and rejected off that. Overall, it seems like Bitcoin is currently stronger than Ethereum."
Jeff, speaking of Ethereum, let's see what the number 2 ranked cryptocurrency is up to. Ethereum's price is down 3.6% on the 7-day chart after opening the week at $1,340 and spending most of the week trading below $1,300. The 7-day high reached $1,396 and the 7-day low bottomed at $1,229. Ethereum's biggest price action occurred at the start of the week when the price crashed 10% in just under 4 hours. According to analytics from ultrasound.money, Ethereum's inflation rate has dropped to 0.19% per year since the merge that happened on September 17th. By comparison, if Ethereum were using proof of work for consensus, the yearly inflation rate would be at 3.78%. So in total, 7,270 Ethereum was burned over the last 7 days, which equals about $9.4 million at their current prices.
Taking a look at the burn leaderboard from the last 7 days, Uniswap v3, the decentralized crypto exchange, burnt 723 Ethereum. OpenSea, the NFT marketplace, burnt 624 Ethereum. And Ethereum transfers were responsible for 451 burnt Ethereum. Moving on to the technical analysis. Looking over the 1 week time frame, Ethereum is currently flashing a sell sign. The oscillating indicators are predominantly neutral, and the moving average indicators point to a strong sell position. Traders Weekly shared this analysis on Ethereum's price. Quote, Ethereum, similarly to Bitcoin, enjoys a temporary relief. However, we remain bearish as fundamental and technical factors do not force us to reassess our views. For the short term, however, we would not be surprised to see a bit more upside as we expect many market participants to forecast the bottom and hunt for a bargain. Despite that, we think the bounce in price will be short-lived like on previous occasions. Accordingly, we stick to our $1,000 and $900 price targets.
Now a look at the global crypto markets. The global crypto market cap opened the week at $905 billion and dropped 2% on the week at $888 billion. The total market cap made a 7-day high of $940 billion and a 7-day low of $872 billion.
On a list of coin market caps, top 100 cryptocurrencies, Reserve Rights, an ERC20 token ranked 90th by total market cap, is the week's biggest winner. The RSR token is up by 57% over the last 7 days and is currently trading hands at 0.0086 cents.
And on the other side of the top 100, EOS, an open source blockchain platform ranked 44th by total market cap, is this week's biggest loser. EOS coin is down 14% on the week and is currently trading hands at $1.13.
Taking a look now at the Bitcoin dominance chart. Bitcoin remains the #1 spot with 39% total market share. Ethereum, a close second place with 17% of the total market share. And Tether is in third with 7% of the market share.
The Crypto Fear and Greed Index, which analyzes the market sentiments for Bitcoin and other top cryptocurrencies, is currently at 20, indicating that extreme fear is the prevailing market sentiment. Market sentiment has decayed from last week when the sentiment score came in at 23.
On to today's stories. Although Voyager stakeholders will still have to wait until the conclusion of their filed Chapter 11 bankruptcy, the brokerage firm has selected FTX US platform as their bid winner to help them get out of the $1 billion hole. Voyager had to file Chapter 11 bankruptcy on July 5th. Chapter 11 bankruptcy, otherwise known as the reorganization bankruptcy, allows a firm to retain control of its assets and continue operating whilst it plans to restructure or just sell the business, according to uscourts.gov. In case you forgot, the filing was for an insolvency claim worth over $1 billion after the crypto hedge fund Three Arrows Capital defaulted on a $650 million loan from the firm. Voyager says its claims against Three Arrow Capital remain with the bankruptcy estate. We got that report from Cointelegraph, who reached out to Voyager Digital and FTX for further comment, but they never heard back. The company maintains that the Chapter 11 filing was, quote, aimed at returning maximum value to the customers and also considered a reorganization, but stated that the sale to FTX US was the best alternative for Voyager stakeholders. Voyager customers are still in the dark in regards to more information on what will happen with their crypto holdings. If you're an investor who's wrapped up in this Chapter 11 case, leave us a comment below on your thoughts about the Voyager bid.
Hackers will be hackers. BoardApe Yacht Club NFTs have been in the spotlight of the NFT world for quite some time. They're so popular that artists such as Snoop Dogg and Eminem have started to incorporate their BoardApe personas into their performances. NFT hacks have become so common that 142 apes, actor Seth Green's among them, have been stolen. How do they get them back? Well, they're being forced to buy their own NFTs back, if they can afford them, that is. BoardApes are selling at a fifth of what they used to cost at their market peak, but now they are going for $100,000. If you're a 90s baby and a millionaire, you might be able to jump on the new hype of the Beanie Baby NFTs. All of the apes and Beanie Babies are interesting, and here on Crypto Market Today, we even have an arts and culture segment where we display the high-selling NFT. To outsiders, NFTs are simply digital art, but what if that art is distracting us from what non-fungible tokens are actually capable of? An article from Cointelegraph highlights the possibilities. One example is how NFTs can store our medical data securely. Researchers at Baylor College of Medicine have suggested that NFT ownership powered by smart contracts could provide citizens control of who accesses their personal health records. This would keep our medical history personal and allow citizens to sell and show it on their own terms. Our medical data is routinely sold to big pharma via data brokers. Of course, this comes with the inevitable hacks and scams, but if they're already stealing our medical data, I'd be willing to risk for a payday from big pharma. South Korean developer Do Kwon has been issued a red notice from Interpol. Interpol is the organization that fights international crime, and the red notice is a request for worldwide law enforcement to locate and arrest a person who is pending extradition or similar legal action. In Do Kwon's case, the hunt and hopes for some investors of the Luna token to see him behind bars is due to the loss of funds and the crash of the Terra token. When billions of dollars disappeared within a week's time, we now see the former Terra USD and Luna trading over 90% down from its hopeful dollar peg. This may very well go down in history as the most dramatic loss of all time in any currency ever. Since the governance token will never recover and Kwon showed no sign of attempting to bring life to the deceased tokens, Kwon's solution was to hard fork and start all over again with an entirely new cryptocurrency. Kwon has not mentioned any approach to recover the enormous loss to the Terra investors. Kwon has been confirmed to leave South Korea, and that is why prosecutors issued the red notice in July. Although his whereabouts are currently still unknown, the 31-year-old developer stated on his Twitter account that he is not hiding. In a recent series of tweets, followers ask him to come forth with his whereabouts, but he rebuttals back with, quote, "I'm not using Twitter to invite guests." We will be following this story closely, so stay tuned for Crypto Market Today updates.
A lot of studies have been coming out since the Ethereum merge on how much of an environmental impact those proof-of-work blockchains, in particular Bitcoin, are having on the energy consumption index.
A study published earlier this week by the Cambridge Center for Alternative Finance shows that nearly 62% of Bitcoin's total energy consumption since the beginning of 2022 was generated from fossil fuels. The CCAF has been collecting data on Bitcoin's electricity mix consumption for a few years and is now gaining interest after the merge successfully launched on September 17th for its competitor, Ethereum. One of the highlights from the merge is the 95% reduced usage in power, and that's due to Ethereum being a proof-of-stake blockchain. The data from the CCAF shows that coal and natural gases are the fastest growing energy resources for Bitcoin mining.
Many of the world's largest climate groups and environmental regulators have called for Bitcoin to migrate to a proof of stake in order to be more power efficient. Environmental advocacy groups Greenpeace USA said Bitcoin should change its consensus mechanism to the POS like Ethereum because POW is fueling the climate crisis. The demands of the climate and environmental groups are going unheard by the Bitcoiners. Jack Dorsey, the CEO of Block, formerly known as Square, and a heavily invested Bitcoin advocate, shared a blog post explaining why he thinks proof of work is still better than proof of stake blockchains. He said in a letter last week, quote, "Bitcoin's carbon emissions would hardly be noticed if it were not for the competitive guerrilla marketing activities of other crypto promoters and lobbyists that seek to focus on negative attention of proof of work mining." Let's not forget that Dorsey co-signed a proof of work letter to the environmental protection agencies this past May, which attacked the proof of stake blockchains due to probability of centralization. To get a clearer picture of what life would be like if Bitcoin did transition to a proof of stake blockchain, right now, Bitcoin is estimated to be responsible for about 0.08% of the global emissions. Seems like mining might have to be a thing of the past moving forward for the future of crypto. Some funny things occurring in the crypto world. Celsius CEO, Kraken CEO, MicroStrategy CEO, FTX official president, and Alameda co-CEO all stepped down. Will the real Slim Shady please stand up?
Universities are jumping on the crypto craze. Now you can learn how to become a millionaire just to pay off your student loans.
Miami's mayor is having the city invest in crypto. He's never made a previous crypto investment himself. Only investments coming on the shore under the cover of darkness.
We'll end today's episode with a little crypto arts and culture as we take a look at this week's #1 highest selling NFT. And Jeff is new here. So Jeff, we have a nice tradition here at Crypto Market today. You have to give me a drum roll for the highest selling NFT. Do you think you could do it?
I got this.
Okay. And this week's winner is, I'll take it, thank you, CryptoPunk number 7273.
This one-of-one CryptoPunk sold for 369 Ethereum, worth approximately $195,000 at the time of sale. The seller purchased the CryptoPunk NFT nearly 2 years ago for 169 Ethereum, worth $301,000 at the then Ethereum price, netting a cool $194,000 profit on the recent sale. Thanks everybody for watching.
That about does it today for Crypto Market Today. And if you like this video, give us a thumbs up to let us know. And subscribe to our channel here on YouTube so that way you can receive a notification when our next market update goes live. Remember, nothing from today's segment is investment advice. Crypto is risky. You could lose what you put in. It's important to do your own research before making important decisions. Well, we'll see you next time.